Before I start, could you please raise your hands who, in some form or another, are connected to consumer lending in your business? So quite a lot of hands. I mean, I was actually expecting it looking at who's in the audience. But since you are in the consumer lending or are taking some risk towards the consumers, then I'm sure you are familiar with the two challenges that I guess you are facing pretty much every day of your work. And this is one, how to give out more loans or how to increase the acceptance rates, especially in the segment of millennials, young people, immigrants, for example, all the thin file customers. And second, you must then be struggling with your portfolio quality as well, so how to reduce the credit losses that we are taking in. We at Big Data Scoring have actually a solution for both of these issues. How we do it? We collect vast amounts of data for your customers from various online sources. So tens and tens of sources from online. So it's a whole new data source open for credit scoring. And using this new, so far unexplored data source in scoring opens up the untapped market for you, as well as helps manage the credit risk. The whole solution that we have, and we'll go straight there, in reality works in the background. So you wouldn't be able to see anything. So all the magic happens in the background, so the clients, neither you won't see anything. But since we had to present something here on stage, we made a demo that you can actually see. My colleague Meelis here will help me out. The solution works like that. A few pieces of input information which all banks know for their clients anyway. For example, my first name, last name, email address, phone number, home address, and that's pretty much it. I mean, this is the amount of information that we use to collect the vast amounts of data from all the online sources that we can, and then use this data in credit scoring. What happens in the background now is simultaneously tens and tens of requests were sent to online sources, and now the data is here. What can we see, or what can we learn from for the clients, and what does it mean for a bank? First and foremost, you can see that my score was 7 out of 10. What does it mean? This is the most important part of the report and the product that we have. Our algorithms have been trained on actual payment data for more than 3 years, and we have been able to find the correlations and patterns in the online data that help us predict one's payment behavior. As you can see from here, my score was a 7. So this means somebody like me has a default likelihood of a bit more than 38%. Of course, these scorecards are market-specific, client-specific, and so forth. But what's quite common to all these scorecards is actually this online data itself is not enough to do a profitable lending business. But what we've seen is that when our clients combine these scores with their own in-house scoring algorithms, then the average improvement in the scoring accuracy is around 15 to 25%. And we're working with some of the largest banks in Europe, and a 20% improvement in credit quality and credit scoring accuracy is a huge step for them. Let's go to the data to just show you a snapshot of the information that we use to come up with these scores. So first, we investigate the neighborhood. Of course, it's nice to look at from the picture, but for the statistical algorithms, here's the amount of data that goes in, and based on which we assess the neighborhood of the person and other geodata specific aspects as well. Second, we of course track what type of device has been used for the loan application. Here you can see the scoring was done on my Chrome browser with my MacBook, and then many other technical details as well. After that, we take a look at the IP address information, so where this application comes from, who's the internet service provider, what this neighborhood looks like, comparing IP address, physical location to the home address, and many other things there as well. If you scroll further down, there's a lot of information. So yeah, here you can see in the bottom actually that I'm here in the States, in New York, in the Hilton organization and so forth. If you go further down, then investigation into my email address. This reveals a lot. And if you go even further down, then maybe one of the most interesting parts of the whole search is what we can find out about these people from Google and other kind of publicly available online sources. Because if you hire somebody to work in your team then I'm sure you Google these people, you go through the LinkedIn profiles, you check the Facebook, you do whatever it takes to get to know this person. While at the same time, if you lend actual money to these people, then all of a sudden you don't do it. You're just happy with a pure loan application and old credit score from FICO or some other place like that. We have found a way how this online data can be actually included in the credit scoring algorithm, and then doing it all automatically and in real time. So in reality, the score calculation as such doesn't take more than a few seconds in the background. And also, if a lender wants, then we can also include social media in the information. So for example, we have a scorecard that is purely based on information from Facebook, and we can do LinkedIn, any other source as well. So all in all, that's the solution. If here in the audience are banks who would like to try it out, then the great news is that actually this can be back-tested on historical data, risk-free. We come to your place, we show you on actual data, actual results, how much value added we could have provided you if you would have been using us for the last 2 or 3 years, for example. So it's actual bottom line improvement that we can show you. And if there are people in the audience who, just out of curiosity, would like to find out what their score is, then come to our booth. We are happy to score every one of you and then give more details as well how the process went. Thank you.